Great. So, what I love about the sci-fi art anthology is the fact that Chris has been creating this sci-fi community for about 2 decades, and has worked with a lot of the sci-fi greats, as well as with many clubs around the globe that are sci-fi clubs. So, as he takes his art collection that the this company owns to NFT space, there is an inherent sci-fi community that already exists that can now be empowered with NFTs, and this is that newest form of funding that we're going to be trying to discuss today. How is this impacting the whole world of liquidity and funding? Um, so that's Chris. Hey, Bitcoin is King. You want to say hello? Okay. Well, whenever you're ready, let us know. Um, so let's think for a moment, how is the venture capital business changing? Um, when I was involved in the venture capital space, it was really before everyone had a checkbook. So maybe at the very beginning of this, there were about 200 maybe venture capital firms that mattered. Almost all of them were in Silicon Valley, and almost all of them wanted to bike to the ventures. So if you were launching a venture in Europe or in the Middle East or somewhere else on planet Earth, and you didn't think about moving it to Silicon Valley, you were not going to get investment by Kleiner Perkins or Sequoia or any of the top tier investors. That's where it all started from. And there was just a very limited number of top tier investors. And then the market became more and more interesting because incubators got created. We launched the very first corporate accelerator at KPMG, and these incubators allowed companies like ours, like KPMG, to come into a deal early. The earlier you were in the deal, the more likely you were to be inside one that's going to a top tier firm like Sequoia. And if you were not in it before Sequoia invested in it, it was hard to get in it subsequently. So there was a real kind of hierarchical order of who was getting money, how, and why in that structure. Crowdfunding got launched here in the US in 2015 and 2016 with the Jobs Act. It opened up the opportunity to raise funding from the crowds for people who were selling products and services to the crowds. And that was, I would say, the first step in the direction of what's happened with the blockchain. With with the blockchain and ICOs, then by mid 2017, there were these pools of money around the globe that got initiated, and people started investing into these new ventures and seeing huge returns on their investment very quickly. But these pools of money sometimes were stuck in countries and jurisdictions where they couldn't really invest it in anything else and show the ROIs. So a lot of the money got kind of engaged into the market globally. Most of it was not even from the US. I think initially most of it was from Asia, and then subsequently from Europe and EMEA region. So there's quite a bit, I would say, of money flow happening. 2017, 2018, 2019 was a bit of a crypto winter. And then 2020, we saw that sort of birth of DeFi. DeFi really got birthed many years before that, but there was not as many uptake. There was not as much uptake on it, and I would say the 2020 saw the biggest uptake in the DeFi space, and many of the companies that were launched in 2020 are hitting billion-dollar valuation, $1 billion in revenue, $1 billion in total value locked, et cetera, et cetera. So that market's growing super fast. And then finally, we have the NFTs. So what would you do today if you're an entrepreneur and this is where we've been with funding, and this is where we're going? What kind of funding would you actually seek? If you're going to the consumers, you may want to consider an NFT's drop, but the drop has to be strategic. So if we just do an NFTs drop and we got a bunch of people in our NFTs club and they're all excited to be part of it because the NFTs are gaining in value, but there's really no strategy to what that club is going to do in the future, that excitement in the community may last for a period of time, but at the end of the day, there has to be a vision of building something that's going to benefit that community in a very strategic way. So some examples, like why do I like what Chris is doing? He has this sci-fi community that's a very avid fan community, but fans don't get to participate in the creation of art, in the distribution of art, whether it's film, television, or other sci-fi programming. But with his community, they will get to do that. So that's like one way of thinking about it. Should you then think about having a token for that community once you launch the NFTs? I would say probably, because the more liquidity that you can bring to an economy that you've created in this new space, the more likely it is that you will have more members of the community, and there will be an easier way to pay them for their services, pay them for their participation, and keep them engaged in the process. So if anyone has any questions, this is a good time to maybe take a pause.
No, I think that's a very thorough, background, and, it's very comprehensive. What you just broke down, Mariana, definitely kind of explains, the past and, kind of the future and the strategies that really that need to start getting implemented, and it's really smart, on the back end, to really be thinking about different ways to create liquidity, especially for NFTs. As you could probably guess, that has been a problem, for certain projects. So I really like that you brought that up, and I think that's a really good tip. If anybody didn't catch that, I'll repeat that, just because I think that that was a really good tip by you, just in case. So always think about ways to create liquidity for your projects. I think that that's a brilliant thing to do. One thing that you don't want to do is just have the money tied up and then not have people be able to take their money out of those pools unless those are people who are accredited investors or investors who understand the long term. If not, you're going to have people knocking on your door asking where their money's at.
Thanks, Carlos. Hi, Stephen. You have a question?
Yes, hi, Mariana. Yeah, I'm trying to just find out what a strong NFT offering would look like. I have a collection of 1940 sports photography from Associated Press, which I think after 67 years is the longest their copyright can hold. And they come complete with the caption and hand-typed stories that go along with them. And they're great photos like Joe Louis, Ted Williams, on and on and on. Just trying to see if that's a viable photography NFT.
I think that's a really good question. I'm glad you're bringing that up. So, okay. And Chris and I have this discussion like weekly. What is a collection, right? There is a collection that in the art world we consider a collection, which is what you just described, which is what Chris has with, original art pieces of a sci-fi collection. And when we talk about a NFT collection drop, that is a somewhat of a different collection than the one we would think of in the physical world. Is what you have a good NFT drop? Absolutely. Is that what I'm talking about in funding the new ventures? Not quite. And here is the difference. So if you look at the CryptoPunks and the amount of money they've sold the collection of, many thousands of pieces. And if you look at the Bored Apes, which use that to create basically a new format in venture initiation, that is a slightly different collection. These are algorithmically created. There are certain characteristics of the art that you want to have in the collection, but they're really used to create this community of engaged users inside an ecosystem. So as soon as the Bored Apes raised, sold over 1 billion, and the original founding team of the collection kept some of the pieces, they started cutting deals with top tier talent and talent agencies, and they're sort of in the talent management business in the NFT space. That's a real business. They use the NFT drop of their algorithmically or computer created collection, if you'd like, to create a business that's going to be helping top tier talent create their own NFTs and experiences surrounding their NFTs. That's more of a strategic business long term, right? And it usually comes out of that very large collection. Is there great business to be had if you have a collection of artwork that you should be offering to the world as NFTs? Yes, that's definitely a great business. It just isn't sort of this new funding opportunity I'm kind of describing. Does that make sense?
Okay. Yeah, thank you.
It's not to say that you could create an NFTs collection out of what you have and drop 8,000 or 10,000 pieces if you want to have some business at the back end of it. But you have to think to yourself, what is my business? Like 3Lau, he did a great NFTs drop. He didn't even do a collection, but now he's created a business with A16Z where they're trying to create, recreate royalties business in music and how it's done. And so that to me is using NFTs strategically to create a new business format that didn't exist before that's going to change the world in essence.
Right. Yeah, I was just trying to see how to move forward with what I believe are one of one original photos from the 40s of great events, but that's a different subject, I guess.
Yeah,
You
that's a
know,
good business. Good, different. Yeah.
and I was just going to ask you a quick question, Stephen. As far as, is your goal to, really manage an NFT, project, or is your goal really to sell, those pieces? Because there are, other exchanges that already exist, or maybe other collectors that possibly might be interested in doing that for you versus you managing it. Just, I don't know how much time you have to
Yes,
spend
no,
on this.
yeah, just looking to monetize it, really, yeah. And I
Yeah,
think it's
that's what yeah,
also
sorry, go for it.
looks like it could be a book too because it has all the stories and captions that the AP photographers and writers put in, and it's just really an incredible collection of probably a few hundred photos.
Yeah, my recommendation then, just because I think that, what you do have is something of value, you would have to double check, of course, with the copyrights, etc., But that being said, it might be a better route for you to look strategically for a partner that's already doing, NFTs in the space, maybe Mariana can, recommend somebody or somebody within the network. But that being said, I think that that might be a better fit for what you're trying to do, and then you could monetize it and ultimately spend the time on the things that you want to do, which, yeah, I think are it's probably not, spending, hours a day marketing, your
Right.
NFTs.
Correct. Yes, exactly.
So, best of luck doing that, Mariana. Maybe you have some suggestions you can take offline, with him on that specific aspect.
And I think Adrian would be a good person to talk to. I have some other people I can recommend. Terry probably would be a great person to help you just kind of figure out how to mint that collection, where to go with it. There are lots of people on the clubhouse that really understand how to optimize that process, so that you don't have to do all of the work, but you actually get the benefit of the collection, which sounds wonderful.
That'd be great. Thank you, Marianne.
Hey, Stephen.
Yes.
Yeah, this is Chris. I have a question. This is kind of from my film production thing. Are these images you're talking about? Are these PD, public domain?
I believe so. That's my next step. I just got back from viewing them. It's a family owned collection of photos, and my initial check said that the longest you could copyright a photo was 67 years, and these are from the 40s, so it's past 67 years. So I'm hoping, but I'm not definite yet of how that status is.
Well, you're going to run into a big concern because if they are public domain, then it means anybody can do anything with them. Just like if a film's not copyrighted correctly, anybody can broadcast it, anybody can do it. If they're public domain, you're going to have an issue because it means everybody in this room and everybody on the planet can take them. And mint and do whatever they want with them if nobody has copyright. Now, there are ways that you can secure copyright on them if you can find out the originator and
Yeah,
then
AP
work a
Press.
deal to secure it. But if you don't have copyright on it and you're offering it as like a one-on-one, you could really get into a situation because, like I said, anybody can do it.
Yeah, I don't know the ins and outs of one-on-ones, but I know that I don't believe there's copies. I don't know. There could be copies, I guess, of the photos, but we're in possession of them, and yeah, I guess I'll have to see if I could get a new copyright. Maybe I don't know how that. Just in the beginning phases, I just think they're incredible photos that are from the 40s, and they have the actual typed paper from from the AP press of the headline and the story on the vintage paper. So it's it's just pretty impressive. Like all the fights where Joe Louis shows all the action punches and when they fall down on the canvas and him drinking champagne and backstage and after the fight and Ted Williams sliding into home and just a lot of great photos.
No,
I
they
think
sound
it's
great.
great. Chris will probably be able to help you because Chris spent the last 2 decades um, finding ways to monetize the sci-fi collection that his company owns, and everything from ringtones and digital kind of backgrounds and paper wallpaper on your computer, etc., to all sorts of other products and services. So he can give you some ideas of ways to monetize this as NFTs and beyond. So that's a good conversation. I think you guys should have.
Great. I'll follow you.
Awesome. So then, what I want to talk about is this whole idea of DAOs. And Jeanette did a very good session on DAOs a few weeks ago, where she really talked about, what is fundamentally a DAO. And I get questions all the time. People will call me and say, "Hey, we know that you guys are, basically experts on DAOs," which no one really is. DAOs have only been around since 2016, and as a format of organization, and they have sort of came about because of a lot of the blockchain projects were created by communities, usually by communities of developers, and now we have these communities of creators and artists, and here like this community of business development people. So DAOs are a new format of organizing a company, if you'd like, or a group of people. There is some DAOs regulation here in the U.S. Wyoming has come up with the regulation where one can legally file a DAO as an organizational structure for a company. And I usually get this question, which is what I want to address today. Should I get venture investment or should I create a DAO? Okay, one is not mutually exclusive of the other. So DAO is really created so that you allow the community to participate in the management of the venture. The community may be funding the venture because they purchased the NFTs or they got tokens, they purchased the tokens in one way or another inside that economy. And then there is some sort of voting structure attached to those NFTs or the tokens where the members of the community could have voting power as to what happens to the network, what happens to that protocol, what happens to that application. That does not preclude that DAO that's organized with tokens or NFTs initially doesn't preclude it from raising venture capital. As a matter of fact, we're seeing more and more situations where that happens. A16Z has thought through this quite extensively. They even have video on their website that talks about how do you dilute a DAO, basically a tokenized economy, so that the VCs can come in and they don't feel that that dilution is going to affect them long term, because the VCs have told their limiteds, their investors, that they will do a certain return on their money in a certain way. So there are literally ways of looking at the token economy for a DAO, for a decentralized organization, and crossing over to a venture funded economy. So that's really, that's really something that one can remember. It's not either or, it could be both. And at the moment, that's really important. Why? Because the venture capital investments in the last 2 quarters were the highest ever in this space, increasing into, I would say A16Z and other top tier investors are investing about 25% of their investments into NFTs ventures, 25% into DeFi ventures, 25% into DAOs, and 25% into what can be called infrastructure for crypto kind of stuff. And then at the same time, there is this inflow of sales into the NFT space of tracking, I think, close to 20 billion at this point in this year. So there's money on both sides of this market that can be used effectively to fund next generation companies.
Actually, I had a question, Mariana, if I can shoot one out. Um, what is there a way to use a smart contract or even some form of a DAO as a uh, as a way to participate in a club or even potentially for a EULA, or is that fundamentally a different kind of structure?
To participate in what you mean, like NFTs clubs, those the ones that Adrian talks about, that kind of stuff?
Yeah, and also like for example, if you purchase certain NFTs, you are by default engaging in a smart contract. I mean, how could you use that like a EULA that you describe what could be done with that purchase, or are those fundamentally different things?
Well, you can really add almost any contract to any blockchain transaction. So if you start with that premise, right, then whether it can be fit within a smart contract or not is not that important, because if you can attach a legal contract to it and you create a business model that you think makes sense for your NFTs drop, for example, then that should be attached to each blockchain transaction, inside or outside of the smart contract, right? You just attach the legal construct that you want. But then the issue I think that you're raising is, does it you know does it make sense to use a DAO as a structure for a venture that basically had an NFTs drop? Yes and no, right? It really depends on the venture. How is that venture going to be governed? Is it going to be governed like a centralized company that we all know and have, invested in and worked with over the years? Is it an LLC? Is it a C Corp in terms of its organizational structure? What jurisdiction it's filed? Is it in the US or somewhere else? Or is it one of these decentralized organizations where the members of that community are building, the actual community? So this was really easy to see, like with layer two companies. It just made sense to have a DAO because everyone's managing a node. Nodes are creating the network. Everything is operating on that network. Every node mattered, and everybody contributing to the network who was managing the node should be a part of the decision making as to how that network grows, et cetera, et cetera. Same thing with an NFTs project. If everyone who is in an NFTs project, like let's say Misha's project, if everybody's contributing graphics and art and subsequent drops and projects out, that are kind of building on the original NFTs drop, then everybody should have a voting right, and that should be a DAO if you'd like. But if it's a centralized, like Binance is doing everything that Ethereum is doing, but Binance is centralized and Ethereum is not. Does it make sense? Is Binance a better structure? Is Ethereum a better structure? We would all here say, yeah, DAO is a better structure. We believe in the community running everything. but Binance is doing really, really well, and they have virtually every product that you can find in a DAO structure in any of these other native chains. They have it in their ecosystem. So, and certainly the pricing has not been against them by not being a DAO. So, this is something that each management team needs to really think through and decide what's the best way for them to grow a business.
Yeah, what I was wondering in terms of the DAO is if you use a DAO for your group of NFT purchasers, and your DAO lays out the usage rights for the NFTs, and then somebody in the DAO misuses the NFT, can you kick them out of the DAO if that's in your bylaws of your DAO?
That's exactly it. You have to set it up so it is, right? Because the community itself usually tries to get rid of the bad actors, but you should think through the issues that could happen inside the community that you don't want to have happen. So one of the interesting things at the trading conference, Terry and I were there, in the on the DeFi panel, they kept, all the traders from Wall Street were saying, yes, it's so easy to create a rug pull, and you don't really know what you're investing in. And some developer just, puts a project out there, and then the rug pull happens. They go away with all the money, and everybody else is left sort of holding the bag. And we kept saying that doesn't really happen that often. It happened maybe like less than 1% of the time with many of these, DAO structured projects. And the Wall Street traders, we had a very tough time understanding that concept because they don't really understand that inside a DAO, this community sort of, bad actor gets kind of, you know, kicked out of the DAO, if you like. If you are one of these developers and that happened on your project, that you won't be able to move that project forward or be part of some other project, and that is more important than getting that rug pull once in your career and be done with it. So there is a fundamental thing that happened within these DAOs, that the community becomes sort of a de facto way of getting all the bad actors out of the community, if that makes sense. So you
Yeah, no, that makes perfect sense. And it's really interesting to understand these things in the abstraction, but once you start applying them to specific use cases, you learn them in a very different way.
Yeah, because you have to deal with actual problems, right? You have to deal with the fact that someone may have not purchased that NFT in good faith, and how do you go about resolving that within your structure? That's when you start to really decide as a management team, was this the right approach? And I wouldn't be afraid of starting a DAO. I see a lot of very, very successful DAOs, and they're successful because people within them feel part of the community and the spirit of building a larger venture and being part of something that's changing the world. That feeling inside a traditional company is very, very, very hard to come by, to get people excited about creating something that's never been done before with other people, and feeling that sense of exhilaration of being part of projects like that. I've been part of a couple of projects like that, and bar none, it's the best way to live. If you can do that and feel like you're part of something that's much greater than you, and you're changing the world, to a better place, that's the best place to be, and that's the best kind of a life to have, right? So DAOs do give people that feeling, and some of these NFT drops have given people that feeling, and you hear that over and over and over again. And so you can't necessarily put your thinking hat on as a person who's trying to find all the ways this could go wrong, like those Wall Street traders did, because there's so many ways this could go right. And we are at the beginning of the waves of change and shifts in many different industries. And wouldn't it be great in your lifetime that you actually participated in that in a big way? and that you move the needle that way.
Well, I think a key component of it too, and I'd love to hear some of the other panelists' thoughts about this is we've talked about it as a method of wealth transfer, but it's also, I think when you look at businesses nowadays, there's a most startups, there's a moment at the beginning where everybody is has their interests aligned, right? If the company does well, they earn more stock, they have better jobs, they have better opportunities. But as the company grows, the interests become further and further misaligned. And it seems like these blockchain opportunities allow much, much greater numbers of people to participate in a situation where their interests are aligned.
Yeah, and there are all these projects like Cardano and Solana and Algorand's of the world that, these layer twos, polygons, etc., that came about and came in, started growing in the last couple of years. And you have these really, really engaged communities building these projects. I believe that um, that is going to continue because the fundamentally people who are building the project are basically benefiting from it, and they're seeing the tectonic shift their project is making in the world, and they are proud to be part of it. They can provide wealth to their families and stability through this engagement. And I don't think they're going to go back to those structures that you're describing, even the old style venture funded companies where, you work X many years and you hope your stock becomes valuable. That's going to be a tough shift for anyone in this room if they crossed over to this space to go back to that. I'm not seeing a lot of that happening. And maybe someone else is and can correct me there. Okay. So, yeah, I feel that we're just at the beginning. There is so much more to be done. um, there's just, I would say, opportunities in every direction. um, I feel that the way that everyone is doing business that you described, Jeanette, in some of these other companies that were venture funded and high growth in essence, I feel that in those kinds of companies, you don't have a liquid asset where that you can trade, that you can exercise value on day after day. And that's, I think, is a major difference between having tokens and NFTs inside projects that are growing really fast in the blockchain space and being inside a locked up stock option or vesting x many percent every year inside of some larger tech
Yeah,
company.
I was going to say a vesting schedule of 0 days, right?
Yeah, your vesting schedule is like immediate. Yeah, absolutely. I think we have a couple more questions. I invited you. You just have to accept the invite and join us on stage. Hi, how are you?
I'm good. How are you?
Good. Do you have a question, Chakram, the creator?
I just kind of wanted to add to it and maybe weigh in on the addition to the panel and get you guys' thoughts on it. But I appreciate the topic at hand because it's discussion that needs to be had and one I think that we're seeing develop as we're moving through the space, which you did a really good job of alluding to. I've been teetering back and forth with the idea of custodianship, right? Like, I don't know if it's a black and white, conversation when we start talking about DAO versus not DAO, right? Like, I think that there's a ton of gray area, and I think the gray area that comes from the development of this new era that we're going to in business, I think the development comes from the current state of the transition. I believe that custodianship, meaning not somebody that's in charge, not somebody that has authority outside of authority given to them by the members of the community or the organization, but having somebody that's almost like in a mentorship style role. Like I don't like anybody bossing me around as an entrepreneur, but I love having a mentor as an entrepreneur. And I think that the idea of custodianship in a DAO, and I'm really liking these projects like Olympus DAO, right? That start off as a centralized project with the intent and the roadmap and the effort towards becoming a DAO, right? Because you want to leave it. You want to build an organization that is able to sustain itself. It's really difficult. It's not impossible by any means, and it's depending on who the key stakeholders are, it's easy to, but it's more than likely difficult to start a DAO off the top and really have it be long-term successful without knowing that you're going to go through a lot of kinks and having people prepared for that road, which is fine. That's what a DAO does, where it's work through things. But having a sense of, I don't even want to call it centralization, but a sense of custodianship there, a sense of guidance, and probably words that are way less weighted than those, that are more loving actions than they are not. And having that mentorship, for the better lack of a better word, there in the forefront of a DAO, I think is going to be a successful business model moving forward as we get in this transition of where DAOs become the norm. And so I want to get you guys' thoughts on that thesis, and I appreciate you. The shock.
Well, I appreciate you asking that because at the very beginning of my career in the space of innovation, if you'd like, um, and when I started at KPMG Incubator, I incubated a venture by a guy who ran the NASA Ames incubator in Silicon Valley. And, he incubated eBay and vertical networks in pocket science. And it was just a wonderful thing to have that mentorship, as you pointed out, very early on as I'm embarking on incubating all these companies using resources of a 110,000 person professional organization, lots of resources. And he said to me, there are four reasons, Mariana, why all ventures fail. And, 28 out of 30 of the ventures in the NASA Ames Research Incubator got top tier venture capital. So not a lot of his ventures failed, right? And so I'm writing it down, I'm taking notes. And he says, number one reason is access to capital. Number two reason is people. And number three reason is people. And number four reason is people. And so that's when I kind of learned that really all that matters is who are the people inside the venture, whether it's a DAO or an LLC or just, three friends down the street starting something. If those people are not going to make that thing happen, that is the difference between a unicorn or not a unicorn kind of a situation. And then later, one of the guys in my incubator that we recruited from Drucker Business School, which is here in Los Angeles area, he had a PhD thesis that reviewed all the VC investors at that time, which were those, a couple hundred really top tier VCs. And they did a study of how do you pick your team, your people for the venture. And I would say every venture capital interview type situation where they were interviewing the members of the team, CEO, CTO, CFO, etc., CMO. Then they were asking the vendors, suppliers, other members in the community what they think about that person. And I get these questions all the time, being an advisor. It's like, do you know so and so? What do you think of them? If I worked with them, I can tell you what I think of them. If I haven't, I know them, they're nice people, but I don't really know what they can do. But it's so in those kinds of interviews, all you're getting at the end of the day, the probability of success is 1 out of 10. And this is kind of the venture capital model, a traditional thing. But if you roll up your sleeves and you spend 3 months building a company with this team, all of a sudden that probability went up to 7 out of 10. So that's a very different, risk profile for someone writing a check. And we learned early on that we really needed to get to know the team members and the companies before we fully engage with them. We need to do some work with them and see how they react to building a venture, which is really what happens with a DAO. you actually have an opportunity to work with someone. You know, Terry's going to be running a room 24/7, and Bitcoin is King is going to be running rooms 24/7 and helping millions of people in the process. You know, they're going to execute, they're not going to just disappear, you know, in hour two of those rooms. So, you know, the people. And once you know that they're executing on everything that they promised and they said, and you can work with them, then you have a very potentially successful venture, and it can be a DAO as well. So I think that's really important.
Yeah, great answer. I think the exact exact same premise. It's all about how you build the DAO from the core parts that matter, and not so much what the white paper says. Obviously, a great team will produce a great white paper, and a great core produce a great DAO. So that's really insightful. I appreciate you very much.
Yeah, so it really is, at the end of the day, no matter what venture you want to create in this space, using these wonderful tools that we were given in the last couple of years by the market, this the NFTs, the DAOs, the DeFi opportunities. You have to pick the team so that you resonate with them and you can build things with them. You have to also figure out what the business is, at least an initial vision that's a business, that's an executable opportunity, that you feel is a big enough opportunity that can change some industry vertical in a positive direction. And then you need to kind of realize that once you start this, your actual business model may shift. You may have to pivot, but you have to be so, on the same page with the rest of your community or your DAO or your founding team, so that you can make that shift together and understand that that's, normal thing that will happen to most startups, because these are in essence startup companies.
Yeah, that's been my experience. Is the beauty of this is you can be extremely nimble. The challenge of this is you have to be extremely nimble, and I think that is another shift that we're seeing in this space.
Mariana, would you mind giving some tips on how to ultimately find people who would want to invest? Maybe from, I know you mentioned that sometimes people in DAOs also involve venture funds, etc. How would you go about, approaching those kind of people? I know you've been working in the industry so long, so any tips I think would be great for the room.
Yeah, so every investment, every person, think about for a moment that someone is going to write you a check. Like, what would they want in writing you that check? They would want to make sure that you, as a management team, are on the same page and are going to stay together, because, as as John G pointed out back to me, many years ago, it's people, people, people. He said the CEO was going to fire the board was going to fire the CEO, one founder is going to fire the other founder, et cetera, et cetera. It all happened to me, to my companies, within the next 2 years. So you see it firsthand that once that happens, there's a huge disruption in the way that the company is functioning, whether it's a DAO or a traditional formation company. So you want to start with having a good working relationship with a team, and making sure that that team, overall has a similar vision, they're on the same page. So when we do an Infiom boost, for example, we put all the team members into the same room and we put them through 4 strategy sessions to come up with their initial plan. Well, that those strategy sessions are not to write the plan. They're going to write the plan after, thinking that happens in the sessions. But those 4 strategy sessions are to get all the management team members on the same page, because frankly, no one's ever at the very beginning of anything, even though they're excited about the prospect, no one's always on the same page with everybody on a team. But if you go through a month and a half, or at least a month of thinking through issues and kind of solving them together, you're more likely to be on the same page. So you got to create a cohesive team. That's one way of doing it that I've done for years. The other thing you want to do is you want to make sure when your investors come in that they're aligned with your vision, because it's very likely that the investors may want to take this in a different direction and get rid of the management team or the CEO or the founders, etc. So you really have to stay kind of focused on putting the investors on the same side of the table as yourself. And I mean, I really love Rish Lodikar from Superworld. For he's one of the best CEOs I've ever worked with, and I've worked with hundreds to date. And what I love about him is in every investor meeting and every business development meeting, he basically gives his vision and opens up the arms wide and lets every investor and every person doing business with Superworld come in and participate in that bigger vision together with him on the same side of the table. So that's another way of building this, it ideally is to get everybody else who's writing the check to subscribe to what you're doing versus going into an investor meeting and having somewhat of an adversarial relationship trying to convince someone that this is the right investment for them. So that's another, I would say, point two of success. And then thirdly, you have to keep looking at the marketplace and revising the vision so that it fits within the marketplace that you are operating under. But I think
Now,
there's so
those
many
are
good
great
options.
tips.
Yeah, those are good tips. There are a
Amazing
lot of good
tips.
people on this, I think, on this panel that have done great ventures and should continue to build ventures. Probably a lot of people in the clubhouse who are, building ventures as we speak. But these are just some pointers like of lessons learned that many of the companies I've incubated or funded over the years or advised have had, to kind of learn the hard way. So maybe we can avoid some of that.
Definitely, and trying to hold on to equity, if you are basically starting your own individual, I'd even say NFT, if you are working with other people, the more equity you can hold for yourself initially is always a great thing. But that being said, you do need to share it, and it's really important to understand, how to do that. And, thankfully, for us, we have great groups that can definitely speak to that. And, I appreciate all the great tips here, as always.
Well, I want to thank you, Carlos, and everyone for all the questions. The only other thing that I see happening in the next couple years, is more and more venture funds will be tokenized, I believe, or have fractional ownership. At the moment, the way that venture industry operates is there are these limited partners, which are usually institutional investors like um, basically foundations, pension funds that have to manage money on behalf of their foundation or a fund. And they invest into different classes of managers, different hedge funds, and as well as venture funds. They apportion piece of their investment to the venture capital kind of category. And so the venture funds then get that money, and in their funding document, they say they would invest it over, I don't know, 5, 10, 15-year period, looking that to get X many returns in that period out of their portfolio and show certain return on investment. So if you are limited and you put your money into a Kleiner managed fund or A16Z managed fund, you may be waiting 5, 10, 15 years to see a return on investment depending on the fund structure. I believe that the funds, I've seen it happen. We were working on one back in 2018 out of Europe, but I've seen more, especially out of Switzerland, they're being done today, where you as an investor could buy a fractional ownership in a venture fund and sell it to someone else. So it would be almost like tokenizing that fund. I see that happening and having more vehicles where I would say more people can participate in someone else managing a portfolio of investments into the startups in the space. So I think it's good for everyone.
I just want to thank you, Mariana, for your incredible wisdom that you've shared with us today. And I just want to do a tiny plug and say, if you want access to that genius on an ongoing basis, you should consider the Infiom Boost program, where you can take all of that amazing knowledge that Mariana has in her head and apply it to your venture.
I would say that Infiom Network has. I mean, I wish Christian was here today, and Scott and some of the other guys who have done a lot of venture deals, Eric, etc. So there he is. He just showed up at the very end, Christian. So maybe we can have him share with us a little more next time. Hi, Christian.
Hey, I was here the entire time. I don't know why I
Oh,
didn't
I
show
didn't
up for
see you.
you.
Do you
Well,
want
not
to
the
add
entire
something?
time.
You want
I
to add
joined
something?
probably 20 minutes late.
Would you like
Yeah.
to add something about the venture capital model and things like, you said you had some good points about some of the articles about why venture capitalists are very important to have as on your side of the table, if you like.
Sure, yeah. I mean, it's somewhat different than this particular article made it out to be, right? So I joined my first startup in 1994, I believe. So I was on the other side raising money, and then we raised money again in 97. And so then in 2000, I joined VC, and then I went back being operational for 4 years. And now I spend another decade in VC. But the larger point there is, as a VC, specifically the way we are structured is we have a longer term horizon, and for a lot of solutions that's needed, right? So a lot of solutions that change infrastructure, specifically now in the context of Web3, just take a lot of time, a lot of foresight to develop, and also you want to actually form a thorough thesis, and you can only do this if you look at a lot of different solutions, right? And so a lot of times what we do, at least that's our approach, we always look at this from the peer review perspective. So not only the content that we put out, but also we provide peer review to the startups, because we look at them as an experiment on these ideas, on these theses that we have on the particular space that we specialize in. And if you listen, then that can be really, really useful to you, because in our particular case, it's not like we are rejecting a startup ever and uh, think of them as like outright failure or however you want to label that. But it goes into our database, and if we think that these particular individuals and a particular topic is interesting, we check back, right? And we'll give constructive feedback, telling them that these are the things that we like to see in a startup in our particular case, and this is our view on this particular space, and come back if you address those particular points that we gave you, right? So I just republished an article to that extent, what we are specifically looking for. And it's just like with everything else, before you talk to an investor, you just want to do your research, right? Because I get, I don't know, anywhere between a dozen or 2 dozen decks a day. And most of them don't spend even like 5 minutes looking at what we're doing, which is very specific. And you can learn a lot by just preparing for that, and then just talk to the people who are actually a good fit for you. And but by doing this, you actually also learn a lot, right? And this type of homework, I think, is very important. So we see ourselves really as fortune tellers in a way, right? So our job is not to manage money. Our job is to predict the future, and that's how we approach the topic, right? So we're forming a thesis, how we see technology evolve, and a little bit of that is bias, as in how do I like to see technology evolve, which is kind of technology should serve human beings rather than the bottom line, which probably makes us a little more unique than most. But at the end of the day, this is a community effort regardless. So we see ourselves as a partner in any startup, right? And any startup in our portfolio will tell you that.
Yeah, and you get a lot of value from someone like Christian who spends his time looking through the patterns and
Right.
trying to figure out a coordinate system that each segment of the business that he's investing in should be working in. Like, what is the coordinate system, and how should this company position itself to to shift that coordinate system in the right direction? And so that is the value that a top tier VC with a strategic view and strategic knowledge of the space is going to actually bring to the venture. Oh, we would love to stay here for another hour now that we have everyone on the panel that I want to have on the panel, but we unfortunately try to keep it short because we realize you all have companies to build and projects to launch and things to invest in. So we will see you again next Tuesday at 10 a.m. And then next Wednesday at 1:30 we will hold this session again, and we will also have panelists from our virtual Infiom Salon. I'm really excited. One of the ventures I've been working on for maybe 3 years now. It's called Open Therapeutics. They're launching next week their Science Coin. It's a collaboration platform for scientists globally to collaborate and be awarded with tokens and create ventures together. So Jason's going to be here talking about that. And we have some other really exciting companies on that panel. So hopefully you guys can join us next week. Thanks again for being here today. And if we missed a question, apologies. We'll ask them, back channel me, and we'll ask them next week.
Thanks, Mariana.
Thanks, Terry. Thank you. Bye.
Bye.
Bye, everyone.